Ladies and gentlemen, Kim here. Welcome to the daily update. You guys had a good day trading today. Market is down quite heavily, down about 2.3% on the S&P. Nasdaq is, I think, Nasdaq's down what, 3% almost? Let's see here. Yeah, 3% on the Nasdaq, 2.3% on the Spider, and about 2% on the Dow. VIX is up 6.5% there. So looks like, so we talked about this level yesterday, right? We talked about how we did see some bullish run, but bulls going to need more, right? And this is kind of the things that you're gonna see happening in a downtrend, which we're seeing in a short to midterm. And despite the fact that we did see this bullish run in the last few days, I was labeling in this market as bearish in the short to midterm, because a lot of times this is how this market, and when the trend is down, is likely these levels going to act as resistance or higher probability. Obviously, if the trend is up, like let's say if trend was up like this, and then it is going after the resistance, right? It is likely that we may pull back a little bit and then break higher or something like that. But when the trend is down, as you see here, a lot of times if we don't see a continuation, if we don't see that momentum quickly advancing or continuing. So this momentum is very important, especially when you want to break the trend, right? Because trend is down, you would be surprised how quickly the sentiment changes. And I talked about that yesterday. I use the exact same language that you will be surprised how quickly the sentiment can change. Because in the last few days, you thought, okay, that might be the bottom at 322, we're at 330. Potentially the market is ready to, get back to all-time highs. But we're back here near the lows here, the swing low here. And so it's difficult to say this is going to double bottom and move higher. Again, if this was uptrend scenario, higher probability, like let's say if it does this, and then something like that, right? So when you're in an uptrend, you know how a lot of times bears like to call it a double top, and I always say it's not a double top until you see the neckline breaking. A lot of times what happens is it breaks slightly and then it just goes right back up. How many times you've seen that happening just in the last, several months, just since the March lows? We saw that happening in April, we saw that happening in May, and we've been covering this every single day where we're in an uptrend, you see what it looks like, a double top, and then either we don't even break below the neckline or we just find support and then it makes new highs, right? Well, this time's a little bit different. We're now in a downtrend with lower highs and lower lows. So when it comes down here, it is a support, but because where the tide is moving in the short to midterm, it's a vulnerable level. So now we do have series of lower highs here, as you can see, right? We got that peak from late August, or no, that was actually September 2nd, so early September, and we got this peak here, or that swing high, middle of September there, right? And then we got this high now. So we got the lower highs, lower lows. And when you have lower highs and lower lows, we want to give benefit of the doubt to the sellers. And I've been giving the benefit to the sellers ever since this thing broke below my midterm moving average here, right? So I've been fair in my analysis, right? When the market was going up, pretty much since March lows, we've been giving benefit of the doubt pretty much to the buyers almost every single day, except the fact that there are a few occasions where there's some neutral ground, some hectic environment, maybe short-term bearish but neutral bullish and things like that. Now we're getting into the environment where we're getting to short to midterm bearish and hectic environment. And the thing about that is, back in June, we actually were still kind of in a bullish scenario, because you see how my my long-term moving average price was still above my long-term moving average at the time, and then you can see how my midterm moving average was kind of moving sideways, slightly lower here, but quickly we got back. So we're about a month or so, I think, we hung around after a kind of steep decline. Today, it seems like, because you can see after this fast jump or fast tankage here, how buyers brought up very, very quickly. Like, how came down hard. I think there was 8% correction. We're currently suffering a 10%. I'm pretty sure we're suffering about 10% correction on the S&P. So let's see. Yes, that's a 10% correction. And in June, actually, this was 8%. And you see how quickly we got back above my midterm moving average, came back down, and then it got right back up here. You see how there's a big jump. There's a lot of people buying that dip quickly. And then when it fell back, there are more people buying. And that's when we saw the price advancing, and we saw my midterm moving average now getting back up. So pretty much throughout July all the way through late August, for 2 months, we're bullish, right? We're bullish, because what? My midterm moving average is rising, and the trend is higher with higher lows and higher highs. It's a different picture. It actually looks even worse than actually June and July here, right? Just look at that moving average, the angle of that moving average right now. Look at this right here versus kind of a sideways to a little bit downturn, right? So you can see we are seeing much more severe sell-off. We're seeing much more severe downtrend than what we saw in June. And buyers weren't able to see a big up move to kind of absorb that, down move. That's what we saw in June. We saw like abrupt, like 8% move, but we saw a very fast up move, and then it came down and then continued higher. What that did was it absorbed it. It absorbed that volatility. So when it came down, we retested low and then continued higher. Here, we did see some bounce of nothing huge, and then we lost it and made a low. I think that was a huge deal. Once we made that lower low, breaking below my long-term moving average, once that happened, even with that move, we seeing my midterm moving average continue to decline here. So it's looking worse than June, July correction. And I would have to label this market bearish in the short term. Now that I see my midterm moving average is about to meet with my long-term moving average. It hasn't happened since the March lows, right? So I have to label this market bearish in the midterm also, but I still want to say bullish in the long term, and that assessment comes from my daily chart. So on my daily chart, keep in mind, if you look at a daily, again, you guys remember that when you look at daily, when you look at 65-minute, when you look at weekly, monthly, it's all going to be different how I look at things. So when you look at daily, we are still in this higher low, higher high situation. So that's the reason why I'm giving it long-term bullish as I look at my daily. But on the 65-minute, I want to give bearish in the short term and also bearish in the midterm, now that we weren't able to kind of gap back up there and actually cultivate another lower high. And, we acted this level acted as resistance there. So bulls can still turn things around if they really, if the bulls can actually gap back up. And right now, what bulls need to do is gap back above 340. And that will be the key level. Anywhere below 340, it will be bearish. You want to turn this market back to bullish sentiment. Buyers need to gap back above 340. And you want to see my midterm moving average rising back up. So I don't see any kind of bullish signal at this point. Only thing the bulls can look forward to going into tomorrow and remainder of this week would be just some kind of shenanigan gap up or some kind of shenanigan up move. Otherwise, if it's just a normal day, we should either kind of see some kind of grindy move in this vicinity or maybe a small, up move, but continue to see this price falling lower. And looks like next level support is, so let's actually put this here. That's current level of support, 322. And I see next level support at about 314. So this is right here, 314 and 311. So let's say 315, 310. That's gonna be the next level of support. If we lose 322, there's a good chance 315 and 310 is where this market is going. I do think that level potentially have some weight as far as some buyers willing to deploy their cash into the market. We may see a little bit more stronger bounce at that point. So let's see how this market plays out at 322. See if we can hold that, or if we lose it though, things can get worse here. Before I let you guys go, I'll look at that oscillator real quick. So the oscillator problem is oscillator just cultivated lower high here, right? And we saw cross, and we talked about yesterday, because we're on a downtrend, even though we did see a cross, we may see a premature curling back down without going all the way back to top of its band. And I giving you that example, something like this. We even saw bullish divergence actually back in early August. This thing was not able to go all the way back up. Stop short came down. We saw another cross. We pulled back, and you can see now we're kind of like oscillating back and forth at the bottom of his band, not able to come all the way back up to the top of his band. That's what he used to do. If you remember when I was analyzing this market every single day since April, May, June, what you usually see is when they cross, they tend to usually go very near to the overbought level. We're not seeing it. We're seeing these premature crosses and kind of falling short, not able to see that momentum. That's what you see, the momentum isn't there. And that's when bears can take advantage of that and continue to make this market suffer to the downside. So I'll come back for you guys tomorrow night, go from there. Have a wonderful evening. Good luck trading tomorrow.